What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have a new real estate investment trust that I bought, and I gave enough hints that I'm going to buy it. I absolutely love it. I'm going to go over a little bit in depth and where they're located geographically and why they're an in-demand real estate investment trust. I'll also go over the revenue trends, most recent news about the FFO. That's very important when it comes to REITs, and why I threw $300+ into them on Monday. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this REIT out right now. That REIT is Invitation Homes. INVH is a symbol. It's sitting at 3264. Its average volume is 3.08 million. The market cap is 19.97 billion US dollars. G range is 2849 to 3653. Day range is 3216 to 3273, and its previous close is 3222. So they're in they're big. They're actually pretty big. And the nice thing about them is right around 83,000 rental homes they have. And they're in 16 markets. They're geographically in great spots. So we're going to go over them. So they lease new construction single-family homes and communities where their residents can live a worry-free leasing lifestyle. So they have newly built homes that are for rent in great neighborhoods where you can live on your terms. Find new homes for rent as they come available in Invitation Homes' newest communities across the country. So looking at them right here, they're in Atlanta, the Carolinas, Chicago, Dallas, Denver, Houston, Jacksonville, Las Vegas, Minneapolis, Northern California, Orlando, Phoenix, Seattle, South Florida / Miami, Southern California, and Tampa. So I'm going to go to their map. Now, geographically, they are doing really well. Look at Florida. So the Miami area, they have 176 locations, and then 421, and then 278 in Florida. It looks like Jacksonville's right at 93. I think it says Orlando at 278, and Tampa / Florida 421, Miami 176. Houston, they have 138, San Antonio 13, Atlanta, they have 573. In Carolina, it looks like they have 198. Phoenix, Arizona, 385. Minneapolis, 28. Chicago, 35. Sacramento has 70. Las Vegas has 100. And Los Angeles has 81. So, really, they're geographically really in good locations. I mean, gosh, Phoenix 385, Tampa and Florida 421, Atlanta 573. So there's a lot of potential with them, and there's a lot of potential with them getting bigger. So again, that's great that they're rental homes, but are they generating revenue? We need to see if they're generating revenue, because as a real estate investment trust, if the revenue's good, that means usually the dividend's good, and you get nice dividend hikes, because remember, 90% of what they make go back to investors. That's the rule of a real estate investment trust. It's like 90% or above. So let's check that out. Looking at their revenue trends, this is annually in millions US dollars. 2014, 658, 2015, 836, 2016, 922, 2017, 1,054, 2018, 1,722, 2019, 1,764, 2020, 1,822, 2021, 1,996, and 2022, 2,238. So there is an increase in revenue. But let's look over the FFO. That is very important. A few things. They haven't updated their fourth quarter 2023 earnings report. But right here, there's a few things that are important. Year over year, the core FFO per share increased 4.7% to 44 cents, and AFFO per share increased by 3.7 cents to 36. So that is important. So the FFO has done well. We already went over some of the revenue trends. Some of the same store renewal rent growth of 6.6% and same store new lease rent growth of 5.2% drove the same store blended rent growth of 6.2%. So that is important. So their acquisitions, they go over new acquisitions. So it is quite impressive how big they are getting. I mean, my gosh, a purchase of 387 wholly owned homes. I mean, that is quite impressive. Just sucking up that many, that is really impressive. So right here, the year-to-date 2023, the FFO in 2022 was 112. Year-to-date in 2023 is 123. Third quarter FFO was 35 cents. The fourth, that was 2022 is 35 cents in the third quarter. In the third quarter of 2023, that was 40 cents. Third quarter in 2022, core FFO was 42 cents. The core FFO was 44 cents in 2023. The AFFO in the third quarter of 2022 was 34 cents, and the AFFO in 2023 was 30 cents. So that is quite impressive. So year over year, the core FFO per share for the third quarter of 2023 increased by 4.7% to 44%, primarily due to NOI growth. Year over year, core FFO per share for year to date increased by 6.5% to 132, primarily to NOI growth. The AFFO per share in the third quarter increased 3.7% to 36 cents, primarily due to increase in core FFO to the share price above. Year over year, AFFO per share year to date increased 6.5% to 112, primarily due to the increase in core FFO per share described above. So again, this is really good. Okay, I really like this. The revenue is collected in the same month billed very strong, above 90%, so that is good. So I really like that. That's what attracted me to this. And another thing also attracted me, which was the dividend. And I'm going to start quarterly. That was 6 cents in 2017 to 8 cents. 2018, it jumped to 11 cents. 2019, it jumped quarterly to 13 cents. 2020, it jumped quarterly to 15 cents. 2021, it jumped to 17 cents. 2022, it jumped to 22 cents. 2023, it jumped to 26 cents. And 2024, it jumped to 28 cents. So the payout ratio, according to Zacks, is 59%. Remember, you're going to get a high payout ratio with REITs because 90% of what they make go back to investors. And remember, FFO is more important than PE when it comes to REITs. Number of dividend increases in the last 5 years is 6. Dividend growth in 5 years is 19.07%. So if you bought one share, you made 112 with a 3.48% dividend yield. I am starting to go big on them. I'm going to reveal to you my pie section for M1 Finance. It's ready to be launched, and I'm really excited to reveal that to you. It's something that I had to check with a few investors that are REIT gurus. Like, do you think that this is safe? Of course, they're not giving me financial advice, but do you think this is okay? What do you think? And they say yes. So I trust them with their judgment because they own shares of some of those dividend stocks. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Did I make a good move buying them? Let me know what you think in the comment section. I'll have a video for you tomorrow. Take care and have a great Tuesday, and I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. Do not use this YouTube channel for any form of tax advice as well. So make sure you, if you're looking for financial advice, you go to a financial advisor or somebody certified to give financial advice, and go to a tax advisor if you're looking for tax advice. Do not use this YouTube channel for any form of that. This is strictly entertainment purposes only. I invest in risky dividend stocks, and there's always a risk when it comes to investing. You can gain money, you can lose money. So make sure you do your due diligence. You can lose money, so make sure you know what you're doing. I really like this dividend stock. I plan on being long in them if something drastically happens, like a dividend cut or something crazy. So you take care and have a good one, and I will see you Wednesday.